Alright, guys, welcome back to the live stream. Let me know if I'm audible or not. We'll wait for more people to join in, and then we will start with the live. Give me 1 second. Alright, yeah. Let me know if I am audible or not. Let me know in the chat. If I'm audible, please let me know. And people who have joined in, make sure that you like the stream as well. Alright, audible. Alright. So people who have joined in, make sure that you like the stream first so that you can focus on the live later on. Alright, we're all set. Let's wait for a few more people to join in, and then we will start with the discussion. Nifty is bullish, kind of. So we'll discuss about it as and when more people join in. But let's look at a few stocks. So Inox Wind Energy. Inox Wind Energy. Yeah. So I wouldn't buy this. So again, you guys are not focusing. There is no demand zone here. All right, the demand is somewhere here. So this is, you're just buying a flag and pole. That is what this is. That is what this chart is. You are literally just buying a flag and pole. So if you see on the line chart, this is your pole and this is your flag. Don't buy this. You can find better stocks. I'm not saying this won't go up. So again, let me just clear it out. I don't mean that this won't go up. All right, this can obviously go up, but this is not the place to buy. Your stop loss is too big. If you buy here, your stop has to be here, which is a 10% stop, and you won't get any exit on 10%. You will come down. There is a demand. You will wait for a break, a bounce back, and then it will fall. You will exit here. So your exit will be at 12%. So don't buy this. Black box. All right. What kind of stock is this? Again, same thing. You guys are just mindlessly chasing contractions. What is the difference between this chart and this chart? In fact, this is kind of better because there's a demand. Let's say, okay. Don't buy this. Don't buy. Oh yeah, what is the difference between here and here? Nothing. The demand is here. The demand is here. So same mistakes again and again. Don't chase contrast. Just because the stock is at the highs doesn't mean it will go up. All right. So Don't chase contractions. Menon bearings again. Same thing. We talked about this demand. It bounced from this demand again. And here it's again extended. So no entry here as well. Nothing. This is your area of demand. If you buy far from it, your stop loss is too big for any sort of risk to reward. So don't buy this. All right, nucleus. I think this is also extended now. Yeah. So again, this is also extended. The basic concept of a move is that stocks will move from a demand zone. So the stocks will move out from a zone. They just because it's going up, it's at the highs and it's sideways does not mean that the stock is about to go up. All right, the stock will go up from a zone. So don't buy these. All right, don't buy this. And I think all of these stocks might look like the same. So yeah, this is also weak. This is still in the pullback mode. Don't buy this as well. Um, this might be okay. This is not that bad. All right, because there is a demand zone here, but there are no zones in your other stocks. So this is not that bad. And I think Rolex rings is also kind of decent. Yeah, this is decent. This is good. This is the demand it's holding. This is the supply. This is decent. Much compact. Uh, much more compact. There are zones everywhere. It's trying to hold this zone. This candle is good as well. So yeah, this is something which you might buy. No recommendations, no nothing. You can look into this. Also, people who have joined in few minutes ago, make sure that you like the stream as well. All right, Unichem. Again, I don't like to buy these stocks. I have talked about it multiple times. If a stock is falling like this from a high and it's just sideways, I don't really like to buy these. I want some sort of maybe pull back to the supply and then I might chase it. But here I don't like to buy these stocks. So avoid this as well. Avoid this as of now because these things can just keep going up like this. All right, and then go to the supply and then quickly move. So I don't like to. I'm not expecting a immediate up move. So if I give you an example, look at this example. Look at this area right here. It was moving up, moving up, moving up, and just at the end took off. This was still fairly close to the supply, but let's see if we can find something here. Look at this one. So even though this is an earnings fall, I wouldn't have bought this even if it did not have any earnings because everything is here. Just a tiny higher low, just a wick at the demand zone. So something like this, something like a move higher and move into the supply and then some sort of a wick at the demand. So maybe something like this. This is what I would buy. All right. Um, right now, don't buy this stock. All right, so what else? What else? This was Unicam. TNPL weekly. As soon as I see someone asking about a weekly chart, I am sure I already know before opening the chart that the daily is not good. So this is like a very common occurrence. As soon as someone asks about a weekly chart, it immediately means that the daily is not good, which is why you are asking about the weekly chart. So weekly is obviously good. Weekly 95% of stocks have good weekly charts. So 95 out of 100 stocks have good weekly charts right now. You can take any random example. Let's just pick a random example. Okay, this is a very. Let's take this one. This is good. Any random stock is decent on the weekly. Even the ones which were falling all throughout last year are looking good on the weekly. So it's just a hope, to be honest, in the current market. Obviously, if the market falls and still some stocks are good in the weekly, then that's a good thing. But in the current market scenario, if you're asking for a weekly chart, then that is out of FOMO in the daily chart. So just look at the daily chart. What about LNT? LNT is mega extended last time I checked it. Yeah. What about it? Um, don't touch this stock. All right. Might not end well. And by ending well, I do not mean that it will just crash like this. You will just waste your time, especially in a large cap Nifty stock. If it moves like this is once in 6 years kind of move. So if you see the LNT chart, when was the last time it moved like this? I cannot see any example apart from this time. So it is moving like this after how much? 16 years. So don't chase this. You can find much better stocks. Sun Pharma, Nestle. All right, we have got a few large caps today. All right, this is kind of decent, but all pharma stocks are decent. So let's talk about pharma stocks. Finally, something nice. Where is pharma? Yeah. So look at the pharma index. This is your last area of demand. So I can talk about indices openly because indices are not traded. So uh, we can talk about it openly. So pharma index, if you see, this is the latest last high, highest high basically, and this is the demand which made the highest high, and the index is trading between this area. And today's candle is actually pretty nice. It is reacting from this hourly base, so you guys can expect some sort of momentum in the pharma index. Now, obviously, this is highly affected by the Nifty as well. So it's not like it will continue to outperform if Nifty falls. That is obviously the risk. That risk is there. But if the markets are overall stable, this should continue to rise up. So if I mark it properly, okay. So this is your area of demand. This was a nice reaction, and now we are trying to build up into a higher move. So pharma can move well in the coming days, and a lot of pharma stocks are already moving well. You don't have to look at the larger ones because a lot of pharma stocks, they are already moving well. So you see something like Aurobindo Pharma already going up. Something like, I think, Glenmark Pharma. This was also already going up. And okay, so my bad. I think there was a connection interruption in the middle. So uh, Sun Pharma, and actually these laboratory stocks are doing great. So Lal Path Lab, and if you see something like a, okay, we should be on now. Yeah. So all these laboratory stocks are doing pretty well, I think. Um, all right. So all these lab stocks, if you see Lal Bath Lab and other stocks, if we look at Laurus Labs, this is also leading the pharma space. Um, Metro Labs as well. Metropolis Health. Okay, Metropolis Healthcare. So these healthcare stocks are also doing good. The hospital stocks. So if you see the hospital stocks, they are also doing good. So kind of uh, stay away from the mainline pharma stocks. All right, you can find a lot of good stocks in hospitals and health and laboratories. So basically, uh, lab testing, basically a clinic type of a stock. Anything lab, clinic, hospital, full time hospital. All these stocks they are setting up very well. So that can indicate something. This is also going up today. Uh, so stay away from um, medicine manufacturing stocks, if you want to call that drug manufacturing stocks, right? Um, the other sort of hospitals, labs, they are setting up quite well. All right, so Nestle India. So what is going on in Nestle? Nestle is too far gone. Avoid it, and it moves once every year, and you can actually find much better stocks than Nestle. Ashoka Buildcon. Okay, again, no. I think some guys are new here. So again, guys, if it's already far from this 50 EMA, don't buy it. All right, all the big moves. If you just have a look at the stocks, all the big moves, all of them. All right, look at this. Look at this. Look at something like this one, even this one, and this one. They start from the 50 EMA. So if the stock is already far from the EMA, it means that the move has already happened. You are entering in the middle of a move. It's like trying to catch a train which is moving at a speed of 100 kilometers per hour. You're trying to jump in. All right. So don't do that. Catch it from the original station. KPIL. KPIL, I have not bought it. Uh, I think many people have started to buy the same stocks. Need to kind of be a bit more exclusive now, I think, because a lot of you guys are buying the same exact stocks. Obviously, if you buy bigger stocks, it's not a problem. This already has like how much 3.5 crores of volume today. So that is cool, because I don't know, you guys are. I mean, obviously, even 10 guys together won't make 3.5 crores, but if you're trading with a bigger size, um, try to stay secretive. All right, don't talk about every stock you buy, because if you talk about it, your entries will be messed up, your exits will be messed up, and overall kind of a uh, bad thing for your trade. So if you're trading with bigger size, let's say if you're buying one stock with 5 lakh, 10 lakh rupees, stay a bit secretive about it, because you yourself will end up moving a stock slightly if you buy on the market price. Okay, Sapphire Foods weekly. Again, whenever I see weekly, kind of a red flag. Now, that Sapphire Food is a very slow mover. I bought it once in this bull market, and it's a very slow mover. Don't buy this. Look at the quality of, and I'm not talking about just the current market. Look at the quality of the moves previously. It takes a lot for it to make a big move. The entire market has to move with it for it to make a solid move in one direction. So avoid Sapphire Foods. All right, very slow mover. I actually bought it here, and I was out here. So from that time, it hasn't really moved all that much. So avoid this stock. Very slow mover. Not a very uh, consistent. There are no consistent breakouts in this stock. All right, PB FinTech actually. Okay, what happened? Yeah, so PB FinTech, if you bought it, you should be out of it by now. So if you bought it, let's say somewhere here, according to what I discuss, right? This candle right here, the yesterday's candle right here, this should be it. Because what is the next stop below this area? It's right here, and this is where it's heading to. So if you are in it, I think you should be out of it. Um, just use the 50 DMA. Even if you don't use the EMA, let's say you don't want to use the EMA, and then your exit. If you're just following basic chart structure, then you should have exited. If you're buying here, I think same candle is your exit because everything is getting broken. This demand is getting taken out. So same candle is your exit. Even if you don't follow the EMA, I can pretty much now look at the chart and tell you where the EMA should be. So if you see any chart, let's take this one. So if you see, if you just look at, let's say, something like this is not at the 50 EMA here because look at the big move right here. So this area is a bad place to buy anyway. But if it dips down, maybe sets up, then that's a good thing. So 50 EMA is probably somewhere here. So 50 EMA is just kind of a proxy for a value area. It's not like I'm buying the bounce from the EMA. All right, the bounce is happening because of presence of value there. If you see, it is approaching it from here. All right. So all these areas, this is definitely extended. So if you see, there's a dip, slightly bigger dip, and then it starts to basically set up and take off. All right. So this entire move right here was from the DMA. This one right here. So 50 EMA is not a hard line where I am looking at a stock and trying to buy the wick from the 50 DMA. Don't ever do that. It's just an area of value where usually stocks will take a pause. All right, Sangvi movers, we have talked about it. It's the okay. Let's talk about the index first. What is happening in the index? So until this area of supply is cleared out, don't take a long in the index. In Bank Nifty, I had taken a few longs on this day right here. I am not exactly out of everything, but most of it I have exited. So index for me is still bullish. All right. So why did I take a long here? Because of obviously a very nice base build up here. There was your weekly demand here. I've talked about that weekly demand as well. Let's just look at it. This is your weekly demand. It was a very solid base building up here. So right here, if you see, there's a dip into the demand. There's a move back up, pull back to some internal demand, this tiny candle, and then a move up. All right. And this is what usually happens. There is a move, dip, a higher low, and Nifty starts moving. Even in this area, if you see, there is a dip, there is a move, higher low, and Nifty starts to go. So still bullish for me. I'm not completely bearish. No bearish trades until this entire area is taken out, which is around 19,500. So nothing bearish until 19,500 is taken off, which is a very long way to go from here on. And Bank Nifty is obviously bearish. So Bank Nifty is obviously still bearish. But so see, what happens is whenever there is a down move, but it doesn't have any momentum, things will usually spike up and then start to continue towards the lower side. So if I give you an example, let's take a random stock. Let's take a stock which is actually falling. Let's see. Okay. So okay, let's find a good example of this. Probably we'll find something here. All right, let's look at this one. So look at this area right here, moving down, but here the momentum is basically non-existent. What happens? Quick spike in, people start getting in expecting a bottom, and from the supply the stock starts to move down again. A bottom is a series of higher lows inside the same high. All right, at least I'm not saying that's the ultimate condition. At least you want, suppose this is a high, this is a supply, at least you want some sort of a series of higher lows, and then you can maybe expect a shakeout or maybe a breakout from here on. So this is what a bottom is. Just moving down and suddenly starts going up, this is not a bottom. All right, so please keep this in mind as well. Also, this video is obviously being recorded, so if I delete something from the chart immediately, you can obviously always go back to it later on. Pondy Oxides, all right, actually a very strong stock throughout this bull run, so throughout this part. Okay, but right now what is happening here looks okay, not something I would buy, but looks kind of okay, because if you see, this is your last move, so this can go up. Yeah, this can go up, but obviously keep your stop as well. Keep your stop here if you're buying it. And again, this is just for education. You risk it on your own terms. All right, power grid. Power grid I usually won't trade in power grid because it's a very slow mover, but since you're asking about it, it can go up, and I think the long-term chart is extremely good as well. But look at the quality of the move in power grid. So since the last base, look at how slow this has moved, while all of the power stocks, even the slow movers previously, even the power finance stocks, something like an REC Limited, look at, they were forming the base during the same time, and look at where they are now. All right, so this is why I don't trade in power grid. And I think PFC as well. Look at this stock, same base, and even a weaker base than power grid, because these are actually moving down. But look at the quality of the move here. All right, so avoid power grid. You can find better stocks, even though it's bullish. So I'm not really looking to buy it, but it is bullish, obviously. Arman Financials. All right, Arman Financials. Would I buy this here? No. But if it dips down and then starts to go up, probably you can buy it. So this area is a demand. So if there's a dip and it starts to go up, maybe you can get in. Can you short LNT? Okay, just because there is no buy doesn't mean that you can just short it. All right, and even if you short it, just because you're asking this question, what happens if it bounces back up? When will you cut it out? You'll have to know. So if I show you an example of shorting an extended stock, so let's say you try to short this stock. So you have to recognize that this is not the move to exit, but this move right here, this is where you exit the stock. All right, so all these nuances, I think avoid shorting an extended stock. I think they can bounce back up from the demand very sharply. So avoid shorting it. There is no question of shorting it. There are much worse stocks to short. Sundaram Fasteners. All right, I think it's Sundaram. Yeah, this is also a very slow mover, which is why I don't like it. You can buy it if you want to, but look at the quality of the move. I'm not trying to sit for 1 month looking at my stock doing this. All right, so whenever I say slow mover, it means it tends to stay sideways for a long time. Again, guys, people who have joined recently, make sure that you like this stream as well. So very slow mover, I am not a fan here. I have traded this stock throughout this area, but it's not really worth it. and also because it was kind of strong in this area. Market was falling down, it was very strong here, but did not translate to anything. It moved like how much? 30% maximum. So yeah, 30%. So to avoid this, you can find better names. Yasho Industries. This is a very liquid stock. I cannot talk about it. A lot of people bought GHC Textile as well, GHCL. This is why I exit when the stock gives me 16-20%. I don't want to see it come back to 5%. Imagine how demotivating this is. All right, so don't be greedy. 15-20% is a lot if you can do it consistently. All right, 16-17% in 4 or 5 days is a big move. Don't be greedy. No one's catching multi-baggers all the time. New land, yeah, this kind of looks good. But obviously, do your research as well. But is this something I would buy? Not at this cost, but okay, maybe I would buy this. This looks decent, and also because this sector is doing really well. So the entire laboratory sector, forgot about this name. I might have to add this on my list here. So yeah, this entire sector is doing pretty well. You can definitely look into it. All right, gold chart. Finally, something outside of stocks. Let's look at gold. Yeah, so gold, very strong long-term demand here. So very strong monthly demand here in gold. This is the monthly chart of gold. So it can definitely simply continue its uptrend here. All right. This is a very strong monthly demand zone. Daily, a bit extended. Maybe you can wait for a dip to buy it. Weekly, obviously, it has broken down, but monthly looks very well. Just a pull back into the monthly demand. SDFC Bank. All right. Don't buy it. I have talked about the downtrend continuing on this candle. It went down how much? 5-6% from there. And now it is actually forming a base. So it has undercut all these lows. All right. It's undercut all these lows. And now suddenly it is forming a base. So if you see, it's the same base as Nifty and Bank Nifty, obviously because it's a big stock. So it is moving. It is moving with the index, or index is moving with it, but don't buy it. At least wait for it to come above the 50 EMA. It is in a downtrend, obviously. Technocraft Industries. Don't buy it. First test from supply, it can simply go down, or it can maybe spend some time here. If something happens here, then you can look at it. Currently, in the current scenario, don't buy it. JM Financials. All right. Don't buy this as well. Don't buy this. Very far. There is nothing here. This can obviously go up. I am not saying that these things don't work. The point is, this is not optimal. So let's say, okay, let's talk about it. Finally, something to talk about. Let's say you buy 10 stocks in your portfolio at one time. You hold them. You're actively trading. I'm not talking about investors. I'm talking about active swing traders. You are buying 10 stocks at one time. And all of them look like this. All of them. So what can happen to your portfolio? Let's say they start to move up. First of all, out of the 10 stocks, 2-3 will come down. Alright, you can take my word for it. Every time I buy an extended stock, it comes down. So for me, 10 out of 10 will come down, but let's say you are lucky, just 3 of them come down. So when it comes down, you have bought near a supply area. Your entry has become a supply. So it will be difficult for the stock to navigate through this supply as well. So even if it goes up in the future, you are putting in a lot of time here. All right. So that is one disadvantage. Secondly, if you're buying an extended stock, then the next supply is also very near. So half of your stocks, they will go up and they will come back down. I'll give you an example. Look at this one. So I bought this stock somewhere here. It went to this supply and now it's again down. Now I don't know what's going to happen to it. Obviously, it can go up, it can stay here, anything can happen. So this is another disadvantage. So set 2 disadvantages right here. Thirdly, your stop loss is very poor. So let's say if I bought here, if I buy this stock in an extended base, I have to somehow keep a smaller stop loss. I cannot keep a stop loss below this demand, because that is how much? 7%. By the time I exit, 8%. Because obviously you don't exit as soon as it touches your stop loss. You wait for the proper breakdown in small caps. So very big stop loss, 8%, 10% stop loss. Okay, my bad. Something is wrong with the Wi-Fi. Anyway, so what is going on? So 3 disadvantages: you are not utilizing the entire range properly, and you're buying in the middle of the range, of the bigger range. All right. So multiple disadvantages of buying an extended stock. All right. And the last one is, obviously, since it's already extended, it might not even move. It might just come back down. So try to buy things which are bouncing off from the demand. All right. Try to get in on the first move itself. Don't try to buy it here, because then it might simply come down. So not according to risk to reward, not a good thing to do it consistently. Once in a while, maybe you can try it, but I don't do that. I don't even do that, because there is no, good reason to do it. You don't know if the stock is going to go up or not. So to buy it when it's extended, not a good thing. CCL products, again, same thing. I have talked about it. I don't buy stocks which have fallen like this from the highs. All right, I don't like this. Don't buy stocks which fall like this from the highs. All right, so Kala Mandir, and this is a new stock, I think. All right, Sai Silk. Yeah, again, so see, if you're buying here, be aware of. See, I'm not saying that buying here is absolutely wrong, but if you're buying here, be aware that the move started from this base. All right, so you might have to see something like this. Your stock is not bearish until this entire low is broken. So just be aware of this scenario if you're buying it. A lot of people, what they'll do is they'll buy the breakout and they'll put the stop loss below the breakout candle. That is the worst possible place to put your stop loss. That is literally a horrible place to put your stop loss. All right, you are putting your stop loss right above your demand zone. So if it comes down, your stop loss is gone and stock is also going back up every single time. So breakout candle stop loss is absolutely horrendous. All right, don't stop doing that. Stop doing that. Keep it below the entire base and just buy it with a smaller size if you're chasing it. All right, but don't lose money by keeping your stop loss below the breakout candle, because so what is a breakout? What is a breakout really? Is this a breakout? Some people will say it closed below the half of the candle, so it's not a breakout, but then in the next few candles it went back up. So what does that mean? Why will it go back up if it's not a breakout? All right, so stop looking at charts in terms of breakouts, fake outs, liquidity traps. All of these very subjective concepts. All right, because you are just concerned about what is a good place to buy the stock, and this is the only way you should approach any chart. Is it a good place to buy it here? What happens in previous charts if I buy it here? Most of them will come down to the demand. So if most of them are coming down to a demand zone, this is not a good place to buy the stock. That's it. If this is a fake out, or is this a breakout, candle close below 50%, 80%, all these statistics not required. All right. So whenever you're looking at anything to buy, anything, any chart, any stock, any index, any intraday trade as well, is this a good place to buy or sell this? That is it. All right. So that is it. Is this a good place to buy or not? If I see it here, is this a good place to buy? No, according to me, no, because the move is starting from here, so I don't want to risk this much. If you're okay with risking this much, if you're okay with seeing a pullback, but you're not okay with missing out on the move, then this is a good place to buy for you. So you consistently do this. All right. So this is the only thing you should be concerned about. Is this a good place or not to take the trade? That is it. Anything else? Anything else? Anything? Is this a fake move? Are big players buying it? Are financial institutions? All these, the big players, some sort of mythical entity. Big dude, anyone with a bigger capital than you is a big player. All right. So I might be a big player for some of you. Some of you might buy big players. Might be big players for me. So all these mythical concepts, just dump them. All right. What happens consistently? What happens consistently? If you can figure out where the big players are buying consistently, then buy there. If you have to consistently guess if it's a big player or not, then this is very close to gambling. All right. You always, you're coming in with a guesswork sort of a strategy. Let's see what can we see in the chart. Okay, big candle, probably some big player entered it, but big rejection, probably some big player sold it. This will not work in the long term. All right. So just whenever you approach a chart, just look at it in a way where just ask yourself, is this a good place to take the trade? All right. What and if not, if it's not a good place to take the trade, why? For some objective reason. All right. Why? Because it's far from the demand, and I've seen in the previous charts that there are tendencies for the stock to pull back and then maybe give a nice shakeout and go back up. That's it. That is the only reason. All right. I don't care if in the shakeout some big player is getting thrown out or a bunch of retail investors are getting thrown out. I don't care about it. It hardly matters. It doesn't matter at all, actually. All right. So all these concepts, they are absolutely useless. Private banks have corrected a lot. Okay, so okay, this has also gone up, I think, in the previous days. Yeah, this has already gone up. Don't buy it anymore. Private banks have corrected a lot. Is this a good investment opportunity? First of all, I am not an investment advisor. I don't do that. I am terrible at it. Secondly, no, because if Nifty is going up and private banks are not going up, it means some other sector is going up. So maybe private banks can continue underperforming for a long time. IT is not going up. So what is going up? Why is Nifty up in the past few days? What is happening? You have to figure that out. Reality was going up. You had an opportunity to buy this. FMCG is trying to break out. So this might be a good investment. Pharma is obviously, I've talked about it. Energy is doing good. So what in energy is doing good? Because I'm sure majority of you don't know what energy stocks are doing good right now, including me. So stick to stronger sectors. Just because it's falling does not mean it's a good investment opportunity. HDFC Bank has been falling since the past 3 years. All right, so how much? 2021, even 2020 is not, 2019 is not far off. Like 15% in 2019 will show up again. But obviously 2020, so 3 years gone. But obviously, if you want to invest something, you can follow some investment strategy. That's just not what I do usually. Following you since the past 6 months in our platforms, whenever anyone asks about any stock, your initial opinion is that it's extended. Yeah, because it is extended. I don't trade like this 80% of the time. 80% is an understatement, probably 95%. My genuine opinion to share some 3-4 stocks which you would buy at the current levels. And if it works well, then more people might join. All right. First of all, I can't do that because I can't simply come out and tell you guys to buy stocks which I like. Secondly, I have discussed a lot of stocks which I have bought previously, and all of them look exactly the same. So if you're following me for 6 months, I have talked about several stocks which I've bought. They have worked well. Other people have bought stocks. I've bought stocks which have been suggested by other people. They have also worked well. So if you still cannot figure out what's wrong with the stocks which I mark as extended, then I think you might need to pay a bit more attention. All right. Since last 6 months, your logic reflected in my PNL. 2-3 stocks was no. I cannot do that. Cannot do that. So if you're following me for 6 months, but you are still asking about extended stocks, you might need to watch my content again and probably note the points which are coming up again and again. Satsoft, a lot of people have bought this here. So don't buy it right now. It's already moving. Don't buy it. And whenever I say if it's extended or if it's not good to buy, it's always based on the stop loss. So if you see the stop loss here is right here, but this entry, the stop loss is much smaller. So somewhere here, the stop loss is much smaller, and the chart is basically the same. So you can use that trick. All right, Sarda Energy. Let's look at this. So this is actually a very nice stock, but don't buy it right now. Let it just show you that it's trying to go up. Let it just test out this supply, and maybe here you can buy it. Just let it show something that it's trying to go up. All right. What else? Asols. Yeah, don't buy this. Again, same mistake, guys. You guys are buying stocks which are falling like this. Can you differentiate between a normal candle and a candle in which institutions are involved? I've already talked about it. Even if you know it, it's useless because institutions are not buying just in one candle. They are buying throughout this range. So even if you know that they have bought here, they are also buying throughout an up move, by the way. I'm just putting it out there. They are also buying throughout this up move. Alright, so institutions are not buying on one candle. So it's practically useless to think about it. Alright. Yeah, this is extended again. If you bought it somewhere here, maybe a good trade, but not anymore. What is your biggest win on a swing trade with stock? Biggest win probably 25-30%. I don't I don't hold stocks for big wins. It's a very see, when you're holding stocks for big wins, you are allowing for more variance in your strategy, because you can just catch the first move. What happens after that is beyond you. All right, you don't. It's just a guesswork. So if you are holding stocks for big wins, you are allowing the market to mess with you more, and you have to find the sweet spot. So that sweet spot for me is actually around 20%, because maximum of the stocks I buy, they move up 16-20% and then they're done. So I don't remember a big win at all. Maybe this one, but this is also how much. So, and I don't regret one bit of selling the stock. So I bought the stock right here around 103 and I sold it at 140 something right here. I don't regret one bit of not taking it till 400, because in that time I've bought many other stocks which have given me 20%, probably like 20 more stocks which have given me 20% since June, maybe even more. So who cares about another big move? Okay. Yeah, don't buy this. Again, you guys are coming up with the same kind of stocks. They move up, they fall down, and they are sideways. So don't buy these stocks. All right. Any scanner or filter? No, I watch all the stocks. I go through stocks manually. Why don't you trade FNO stocks? Because FNO stocks, first of all, they the momentum in FNO stocks is highly dependent on the overall market. Secondly, you can trade them. All right, you can maybe buy these stocks. This is not a bad trade at all. But the problem is most of them, they won't move big. They are very mature companies. So something like a, let's say something like what, Ashok Leyland. All right, see how well it moves. It doesn't. All right, so even if you catch a breakout, it's very hard to expect the stock to double up because it's a big company already. So so this is why I don't buy them, because how much can you really expect? Can you expect 20% consistently on every breakout? No, you cannot. It's a big sectoral breakout that carries these stocks. So overall, not very optimal for swing. I mean, you can make more returns with small caps. Obviously, if your capital suddenly you come in with a capital of 10 crores, then you cannot buy small caps. Then you'll have to buy futures. But if your capital is small with small caps, why would you go anywhere else? What matters the most for you? Is it your SL or taking a time taking stock when you buy near to demand? Most of the time it will. Okay. So first of all, if it's taking a lot of time for you, you might be doing something wrong, because most of my stocks move within a week. 1 week maximum. All right. Either they are breaking out or failing. So if it's taking more than that, and let's say you buy 10 stocks, let's say 3 of them take just don't move at all. 7 of them will still move very fast. You can still churn up your portfolio in this 7. So stop loss is most important for me, even if my stocks take 1 month to move. See, a moving stock gives you an illusion that it will keep moving in a direction. That is the main reason why people cannot get over buying extended stocks, because a moving stock is constantly giving you an illusion that it will keep moving more. It's just psychologically comforting. You cannot expect a stock which is so I bought this stock right here, very small size because it's kind of downtrending, but this is the weekly EMA. So I bought this stock just off the open today. Now people would rather prefer buying after the stock has already moved somewhere here, because it gives you an illusion that it will keep going up, but it might not. Tomorrow it might come back down. Now my entry has already become a demand zone because it is the beginning of a move. So here it will go back up. But your entry, if it comes down, you are not seeing your profit again for a while. All right. So a moving stock, this is why it's very easy to uh, outperform the broader sort of I mean, what do you call it? The broader mass of people, because most of them are doing the same things. They are buying here. So the things which I'm doing, if it's not what they are doing, right? So it will continue to work if people are buying higher and higher while the stock is moving. It is beneficial for me because I have already entered lower. So maybe it can help the momentum on the upside, all right? Or maybe they can be faked out here itself. They don't need to be faked out below the demand, all right? Which is why maybe the demand zone continues to work, because most people are not buying before the breakout. So and it's been happening for hundreds of years. It's not suddenly after 2020 things have not started to happen this way. It's happening since the beginning of the markets, all right? Just something comforting about a moving stock. It just looks like it will keep moving. All right. So even if you go back to 2006, if I hide the date, uh, if I hide the date, okay. So what difference can you really tell between this stock uh, and some other stock? I mean, in the current market, it looks exactly the same because the same things continue to work. Look at this move right here. People are buying this breakout, but where is the demand? Demand is right here. So what happens when it comes to the demand? You just buy it here and it goes up. All right. So same things will work, have been working for thousands of years, hundreds of years, sorry, not thousands. And they will continue to work. All right. Let's look at some long questions. What if you don't have time to track your stocks? If you don't have time to track your stock, that does not mean that the stocks which you're holding will move up. What kind of question? So, if you don't have time to track the weather, it does not mean that whatever weather you're expecting will happen. Hopefully, this is clear with everyone. If you want it to rain, but you don't have time to track it, it doesn't mean that it will rain. All right. So, if you're holding a stock, but you don't have time to track other stocks, it doesn't mean that the stocks which you're holding will keep going up forever. All right. So rather getting the impulse move, okay, rather getting the impulse moves consistently. So who is giving you consistent impulse move? That is my question. Where is it happening? If you buy it here, where is the consistent impulse moves after that? So you see one or two stocks, you see five stocks which have gone up pretty well. What will happen in 2022? You will get stuck in stocks and you won't have the money to trade when there is an actual bull market. So let's take a random example. Let's take this one. Where is the consistent up move here? 2 years, nothing. Let's say you bought it off of this base and you expect it to keep going up for some reason. What happened? 2 years and absolutely nothing. All right, and this is one of the strongest stocks. What about this one? This is my entry. This right here is my entry. So you will consistently end up exiting below your cost, waiting for that one big move to happen, which will never happen. Trust me. So This was a very strong stock in 2021. What happened to it? Still below its high. So where are the big moves happening? I am just like, where is it happening? The stocks which you see that are going up, that keep going up, they also look like this before 95% of them fall. All right. So if you're buying 10 stocks, maybe one of them will keep going up for 2 years. Maybe one of them, maybe. By that time you can churn hundreds of stocks and make much more money. Right. So where are the stocks going up? I just want to know, because none of the stocks I am buying ever continue up. All right. So, and let's say you're buying 10 stocks and you buy, and one of them, and actually, see, the point is you are a new trader. So it will feel like you can catch a multi-bagger. All right. It will feel like it when you start uh, distinguishing between an uptrending structure and a downtrending structure. It will feel like, in hindsight, you will feel very powerful when you look at a stock which is consistently going up. It will feel like you can buy here and you can see all the pullbacks because you know that the trend is not getting broken in hindsight. But when you do it in real life, this is what happens in real life to 99% of your stocks. How will you hold this when you see your 17% profit turn to 5%? I mean, I cannot hold this. I mean, and by the time, and I'll give you another example. I bought this stock. What was the name? So, okay, what was the name of the stock? Give me 1 second. I'll just find it out. Give me 1 second. Okay, this one, yeah. So I bought this stock right here, all right, expecting a big breakout here, obviously, because the weekly was also looking kind of good. So what happened? The market fell and I exited this stock right here, all right, even though it's not breaking any trend. But what did I buy after exiting this? I bought this stock and it is still making new highs. I bought it right here, immediately broke out, exited half here. I'm holding half, but I think I'll exit it today itself. But the point is, if I still expect this stock to go up, I can be stuck here missing out on hundreds of trades which I can take with the same money. So the good structure does not last forever. All right. The good structure will only last until the market is going up like this. In 2022, the stocks which went up throughout this time have made new lows below this time. All right. So you should try it. I'm not saying it in a sarcastic way. You should actually try holding one or two stocks which you buy. You will understand by yourself, because this is what happens in the market. Even if, and this was what happened with me as well, because even if someone is telling me that this is not the most optimal way, I like to go ahead and try it for myself. All right, and I'll learn why it does not work. So you should obviously try holding one or two stocks. All right. Some might work out, but as soon as the market goes bad, none of it will work out and you will consistently lose out on the spikes which you're catching. So don't do it with your entire portfolio. Just try it with one or two stocks. You see how it works out. If it works out consistently, you can obviously do it. It does not work for me. What if a black swan comes up and all your money is invested in equity stocks? Then I exit all of them at 15% below my cost. So any hedge, why do you need a hedge? First of all, a black swan doesn't happen from a high, all right, because everything is good near a high. A black swan will happen if you're holding stocks during this phase, all right. So I have been trading for how much? 4 years, and I haven't. And this is the only black swan event that I've seen till now. And and how did this happen? This happened after an entire setup for a big fall. All right, a big setup for a big fall, a big rollover at this demand area. So it's not like black swan doesn't mean that today it was going up like this and now tomorrow it's like this. All right, so you guys are scared about nothing. And obviously, I'm not. Uh, so if all my money is invested in equities, I am managing it uh, actively. All right. So if you're not managing it actively, obviously you plan for things like that. You diversify your money. But this is literally my job. So I cannot diversify my money. This is what my job is. So if your company gets shut down today, you will only look for a job after this job is gone. If that makes sense. And at this point of time, I don't think this job will go, because I've seen the worst things that can happen in the market. I have seen these. I have seen this as well. So what can really happen? It can again pull back, maybe. All right. So it doesn't really matter. And obviously, before a big fall, either most of the stocks will be extended already. So you are either in profit, or you are either in a lot of profit, or you are not buying these extended stocks. So when a move like this happens, all of the stocks are already up. So you're not buying stocks when it's already up, and you are the ones which you've already bought from a base. They are already giving you profit. So in this kind of a market, a big fall can happen, or a big fall will happen when it's trying to break down. In that scenario, most of the stocks will be below the 50 DMA already. So what can go wrong? What exactly can go wrong? I can show you an example. Let's say this example. Let's look at this area, and then we'll end the stream, because I think we've already been streaming for more than an hour. So let's look at this time, April 2022. Okay. So when does a stock correct from 90 rupees to 20 rupees after getting sold off for multiple weeks? Here. All right. So April 2022. So see, this stock is already falling. This is already falling here. This is already falling, April 2022. This is already falling. This is already below the EMA. This was a stock which I had to take one loss here because I was buying it here. So after April, I think it's going up. So I bought it here and I had to cut it out at around cost or a tiny loss. That is cool, obviously. This is obviously destroyed completely from 400 to 20 rupees. This was falling. April is this time. So what are you exactly buying when the market is falling? Hopefully this is clear with everyone. All right. The things which are not falling, they go on to double up in less than 1 year. All right. This is already falling. The things which are not falling, something like this stock. Look at what happened after that. This is already falling. So what exactly are you afraid of? You should be afraid of trying to catch a bottom. That's what you should be afraid of. You shouldn't be afraid of trying to be safe from a fall. All right. So with this, we will end the stream. Hopefully you guys learned something. When the index is looking bad, the stocks are also bad. So you wouldn't get anything to buy, even if you try a lot. So we'll end here. We'll meet again next Friday. Hopefully something interesting happens in the market by then. But if it keeps going up, it keeps going up. All right, have fun. Have a good weekend. I'll see you guys.